Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. What a day. I don't know about you guys out there, but this was probably the quietest 70-point range in the S&P I've seen. You're talking about a more than 2% range in the market. Felt pretty quiet. The bonds, they sold off 1% right after the open today. Still, what a very quiet overall move. I mean, that happened over a 20-minute span. Currencies were very quiet throughout the day. Some volatility in the metals. Gold lost some ground. Crude oil, I mean, that thing is going to continue to move. Volatility will continue there. You're seeing clearing firms start to limit access to the front month contract. 25% move in June today. I think about 15% move in July today. But let's start off with the S&P. Let's start with the markets. I mean, you got a huge week ahead. So even though today felt like a little more quiet, it's setting up for a lot here this week, a lot to unpack. First, you got a lot of earnings, and tomorrow. Well, first let's take a look at today's big heat map here, because it was not the tech that led. Remember, tech has been a huge leader. We've said here, or said in the Morning Express last week, that you had 5 stocks in the S&P holding a market cap of about 21%. And yeah, it's those big tech ones. And that the last time that's happened was just before the dot-com bubble. So let's take a look at the heat map here. Overall, Google down, Facebook down, Microsoft down, Amazon down, Apple, it came back at the end of the day. All of those report earnings this week. Every single one of them. You have Google tomorrow after the bell, and then we look to Facebook, Microsoft, Tesla on Wednesday, Apple, Amazon on Thursday. So let's take a look at the charts here. Overall, the S&P it made a run at that April 16th evening, April 17th session. The previous Friday, made a run at that high. Couldn't quite get there. Finished on the softer side, but still up 38, 40 points on the session. The NASDAQ, because of the tech not joining the rally, did not track. You see a little bit of a distance between that high from 2 weeks ago, or about the previous Friday. Yeah, it's going to be interesting to see how the earnings start to treat the stocks, because, again, you have Alphabet tomorrow, you have Starbucks after the bell with Alphabet, you got 3M, Pepsi, you got drug makers, a lot before the bell tomorrow. So there's a lot to digest. You got consumer confidence tomorrow as well at 9 o'clock. So, again, then not only that, you're building up for the Federal Reserve. The Fed has a meeting on Wednesday. They announced today they're going to start buying municipal bonds from different municipalities with a certain population. So again, there's a lot to take in here. But this Fed meeting, even though they're not expected to say chop rates like they have, their narrative is going to be interesting, because there seems to be a tremendous amount of concern out there right now. Overall, again, just a tremendous amount of concern that the markets aren't pricing in, but the liquidity that they provided is what's pushing this. So let's see what the stocks that make up these indices, what are they having to say about what's happening, their guidance going forward, the lack thereof for guidance. But overall, volatility this week is going to be a theme. It's been a theme for about 2 months now, and it's going to continue, especially this week. After the Fed, then you have the ECB. So let's take a look at crude oil moving a little forward here. On the July contract, which is really what we're overall trading, it is to what we were covering in the Morning Express. We hit down here, matched the low of the bloodbath day last Monday, and you got this low double bottom here, and in crude, this 17.12, 17 and a quarter. That's our major 3-star support. It's really the only one we've had out there in the July contract. Can it hold here? Now you're seeing additional pressures in the June. June was down 25%, down about $4 on the day. Hitting into that 9.5, 10.5 area of support that it did stick its nose below there last week briefly, but it's a level of support in the June contract that goes back to 1986 lows. Another one on our mind today in the commodity sector, take a look at it, is silver. Now, gold and silver options came off today, but these options for silver were for the May contract. So this is the July futures here. Silver it really has to be on everybody's radar right now, because gold, which we are bullish gold cannot make a new record high, or at least we don't believe gold can make a new record high without silver joining along. So you do have some support here in silver. This is a July contract, about 15 and a quarter. Didn't quite get down there. Higher low going back early this morning, and then a higher low again right into settlement. And this is when those options expired. So we do believe that you can see a little bit of relief here once these options expired. Go back to gold last June expiration. The June expiration for gold last year at the end of May set off the rally that we are still taking in here in gold. So these options expirations, don't underestimate that in the contract roll, it could relieve some pressure here. So for the silver to get through this, can silver trade higher this week? Can silver trade higher tomorrow? We are favoring it. There's again 15 and 25 in July is going to be a big support. Gold has to hold 1720 area, 725. It's chewing through it a bit. We are bullish over the intermediate and long term. We are still very cautious in the near term right now. You don't want to be buying the rallies, and we're coming off of that rally. You're going to be buying this sort of fall back in. So we don't know where it's going to stop here in the very near term, but we do like gold and silver a lot. Now let's also take a look at moving down the tape, the 10-year. And we talked about the 30-year. The 30-year bond fell out of bed this morning, down about 1% on the day. This is the 10-year yield. So it's the inverse of the prices that we trade. You can see this big support area, right about 50 basis points. And it has been a tough area for the 10-year. It went below it last week. It could not stay below it. We're moving up. So we're probably moving to this trend line here, but let's call it 70 basis points. We're at 10-day highs here in the yields. It's a nice little move. It's off a little consolidation. We couldn't go higher. But on the same way, we're looking at this in the prices. We're not too far off of what is a good support trend line. Does this break through here? Does this bring some buying? And again, got the Fed on Wednesday, got a lot of data. The Fed on Wednesday, Q1 GDP on Wednesday, the ECB on Thursday, growth data from different countries in Europe on Thursday. So a lot to unpack this week and take in. And then you finish on Friday with ISM, manufacturing data. So that's going to be a lot to take in this week. Does this 10-year hold up here? And one thing we can't say enough, and we're going to sound like a broken record here talking about it for months now, but when the Fed launched QE1, QE2, and QE3, not only that, even after Brexit, even after the rate cuts last year, that put a bottom in yields. It put a top in treasuries. Now, we still favor the treasury market going higher. We still favor yields going lower. Maybe for about one more gasp, one more gasp for air, those prices go up there again. And then I think that could be your top. We sort of think that in the sense that there is going to be at least another wave of risk off. We don't think the equity market can just go straight up. We're running into a lot of resistance. We don't see much value in the equity market here. And again, you have a lot of earnings to move through this week and next week, but this week is a big one. So can't emphasize that enough. Know your risk, know your levels, know what you're doing. We're here to help. And then lastly, let's take a look at the currencies. We won't forget those. But the dollar is going to be a big one. So when we're looking at trend lines, we want to emphasize we're not trading trend lines really. We can look at them for a reason to support an entry point with a fundamental backdrop that we already have. Or support other technicals that we like. So we do find the dollar to be bullish overall fundamentally over the intermediate and longer term. More focus on the intermediate term. This is the dollar index, which is like 55% the euro. You got the yen in there, you got the pound in there, all the way down to about 10% of the Canadian dollar. You do have some other currencies below there, the Swedish krona, the Swiss franc. So you got some support in the dollar index, just below 100 here. And, on the flip side, the euro, which is the bulk of the dollar index, you have some resistance. It goes to different trend lines, it's a different range of days, March 31st high, but we hit that today. And the euro traded to a high today of 108.72, and it looks like we came back off that pretty sharply. 108.40 or so is where we finished. So where do we start going into tomorrow? But again, we do favor the dollar to be stronger for a number of fundamental reasons, but then as well because it could not move lower amid the extraordinary measures launched by the Fed. So again, we see what happens, plays out this week. Just know your risk. We are here to help. Give us a call, 312-278-0500. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.